the euro, pound, and US dollar had some big moves during Wednesday's FOMC. So in today's video, I'm going to give you an update on where these markets could be going over the coming days, including my 2026 target for the US dollar. So I've got some key levels to keep an eye on that you're not going to want to miss, because I assure you, you probably haven't seen these before. And I'm going to give you my longer term outlook for the US dollar for the rest of 2026. So literally a 6-month outlook. I don't normally do this, but I have a pretty good read on what's happening right now. So you're going to want to stick around for this video, because it could change the way you are approaching the rest of this year. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, let's start here with the euro chart. Now, before we get into what we could see from these markets next week. First of all, keep in mind tomorrow is a US holiday. So really, when we talk about what we could get next for these markets, I'm referring to next week, okay? Now, I do want to share a trade I had on here on the euro going into FOMC. Now, I put this on Monday, okay? So this wasn't right ahead of FOMC. I did have it on since Monday. I felt comfortable with the risk here because I always manage my risk well. And this is not after the fact stuff, guys. I'm not putting this on to look good. If you look here in Discord, this is the VIP group. This is where I share all of my trades. It's also where I communicate with members throughout the day, every single day, Monday through Friday. And you can see here, this was that trade. So this was Monday. You can see right here, the date and time. And this was the trade. You can see the market was in premium, okay, following that break of structure. You can also see this right here was the entry, stop loss, and take profit. Okay, so I was targeting that inefficiency down there just below 1.15. And you can see here, again, this was the exact entry. And then this here is where I booked profit yesterday. Okay, so you can see that this was where I got out of the trade. And you can see it basically just wicked right into my target there. And so this right here is that same trade. Okay, so the reason I got into this trade, let's talk about this first before we get into what we could get next week. Okay, and by the way, guys, if you want to see exactly how I trade full time, including this trade right here, then check out the link on this screen. That is going to provide you with a free SMC training that's going to show you exactly how I trade full time. If you don't see the link here, check out the link in the description. You're also going to find in the description too, my #1 most trusted broker for the last 8 years, where you can get a 30% deposit bonus. So looking at the euro, the reason I got into this is because you can see back here, we did have a break of structure. Okay, so we had a downtrend. I've talked about this for a while now. In fact, we've talked about a lot of charts for a while. And if you saw yesterday's video before FOMC, I mentioned 11 charts. I gave you guys an update on 11 different charts. Every single chart played out as anticipated. Okay, so I'm not telling you that to brag, but I am sharing that with you because the stuff I teach does work. So looking at the euro here, we had a downtrend, right? Lower highs and lower lows. So following this BOS right here, what I was looking for was a move into premium. So from this high down here to the low, you can see we had the market move into premium. So this level right through here is the 50%, and this is premium. Okay, so we satisfied that. Okay, so that was step 1. Now, step 2 was looking for a 15-minute change of character. And you can see back here on the way up, we had this right here. We had a BOS. Okay, so a close above this high back here. That made this a protected low. We closed below. That gave us a change of character. So that was enough. Now, my entry was premature, right? I did take a little bit of heat on this. Okay, obviously in hindsight, I would have said, well, I would have waited and entered way up here, okay? But in the moment, you don't know if you're going to get the market just giving you this change of character and then just continuing lower without you, or what we got here, okay? So in this case, I did take a little bit of heat. However, at the same time, like I mentioned in yesterday's video before FOMC, there was no reason, okay, to doubt what happened over here. We never had the market take out this high back here, okay? This protected high was always intact, even on this move right here. Okay, so with that, right, this change of character back here was still in play. Okay, so just a little bit of a lesson there for you guys. And this really just comes back to knowing your system, having a set of rules, and knowing that if you follow those rules, that it's going to put the odds in your favor. Okay, and again, you can see where we did wick right into my target here before bouncing. Now, obviously, the euro has moved lower since that time. Okay, but this right here, the reason, again, this was my target is if you look back here on the hourly time frame, what you'll notice is that back here, okay, so this right here was my target. If you look back here on the hourly, what you'll notice is that this inefficiency right here, this was my target, okay? This is exactly what I was targeting here at 1.1479. Okay, so with the euro, and we're also going to take a look at the pound and also the DXY here in this video. So just really, really eye-opening stuff here that I have to share with you guys, including the DXY. Like I said, I'm giving you really my 2026 target. Okay, I don't normally do that, but I have a pretty good read on these markets right now, as you guys have seen from recent videos. Again, not saying that to brag, but just showing you that this stuff does work. Okay, so with the euro right now, we have a new BOS to the downside. Okay, and by the way, guys, if you are enjoying the content, if you do enjoy these videos, be sure to like and leave your comment below. It means a lot to me for you guys to show your love. All right, so BOS to the downside. So what we're looking at now is we have a new protected high at 1.1622. So bottom line here for the euro, as long as we are below this high up here, then we are still bearish. Okay, period. The end. And that's really important to understand, guys, because it basically removes half of the equation. Because if you're a trader, you can either buy or sell. If you know that you now have a downside BOS, okay, and you also have a protected high up here, what it tells you is that as long as we are below this, then half the equation is removed. In other words, for me, this tells me that I cannot buy as long as we are below this low, okay? Or I'm sorry, below this high up here. So, okay, so for me, it's shorts only. Again, half the equation has been removed. Okay, so with that in mind now, what we can do is once again, from this high up here, now we don't know where the low is going to be for the euro, and that's important because this is ongoing. We don't have any confirmation now that this is going to be the external low. It could be here, it could be down here. Okay, so we're going to have to wait and see. But the way that this works is if we were to see the euro continue lower here, right, and then give us signs of a local bottom, then this is going to be our external low. And then we're measuring from this high down here to the low to come up with our discount premium and also OTE, okay? So just like we did back here with this high and this low, and that's what allowed me to get short through here. Okay, so that's what I'm doing again, same thing, wash, rinse, repeat. It's the same thing every single week. Okay, so for the euro, in terms of levels to keep an eye on though, where we could see this market bounce, obviously looking at the daily chart, which by the way, if you guys have seen recent videos, ever since this move back here in March, I have been bearish on the euro, and simply because this uptrend back here, we went from an uptrend to a sideways market. We had a BOS back here above the high, giving us this external low. We had a bearish change of character. So ever since this point right here, ever since this close below, I was looking for a lower high to develop, and specifically up here because we had this imbalance, okay? So again, I'm not saying this to brag, guys, but over the past few months, I mean, I've pretty much nailed this market as far as looking for this right here, the move up here into this inefficiency, and then also the sell signals along the way, including this one here before FOMC this past week, okay? So for the euro, obviously we have this low right back here, okay? So this is gonna be the next stop. Now, obviously we have these lows here as well. So really in terms of where we could see a bounce, you've got this area right back here. Okay, so going back to a 4-hour time frame, again, these are the lows that I have on my radar. Now, again, though, this is where you have to look at the structure and specifically the daily time frame, because if I know that we have this back here, which we do, okay, and so far we have a series of lower highs developing, although even though these lows are still intact, right? If I know that this is the case, though, and we have this change of character back here, do I want to look for buys down here, right? Especially after this kind of move. And for me, I don't. Okay, so again, removing half of the equation as a trader, I am only looking for shorts. Okay, so even if we get the move down here and we do bounce and we get signs of a local bottom forming down here, that to me is just an opportunity to wait for some relief for a short. Okay, so if we just assume for a moment here, and again, we don't know where this low is going to be, but if we assume for a moment now, we know this is the high, but if we assume that down here somewhere is going to be the low, like let's say we wick this low down here, just a hypothetical, okay? If we do that, then I'm looking for a move up here into this region to get short again, okay? And look, I can wait a week. If it takes a week for it to set up or even 2 weeks to set up, I don't care, that's fine. I have other markets to trade. I'm trading the euro, I'm trading all the major currency pairs, I'm trading gold, I'm trading Bitcoin, I'm trading the S&P 500. So I have a lot of other markets to keep an eye on. I don't have to just sit here and trade the euro. So again, if it takes a week to set up, if it takes 2 weeks to set up, then so be it. I am perfectly fine with that. Okay, especially after, again, just booking a 3-hour trade, meaning that my reward was 3 times my risk. So in the case of the euro, this is going to be support down here, waiting for, possibly a local bottom somewhere down here to give me relief to once again short. This does not mean, again, I have to reiterate this, guys. If we get a bounce down here, it does not mean I am bullish on the euro, simply because in the context of the daily time frame, right? There's no reason to be bullish here following this bearish change of character, okay? This to me is a classic rounded top from the euro, okay? Plain and simple. So in terms of the weekly chart too, I do want to mention this here as well, because we talked about this a long time ago. And on the weekly time frame, you can see that we have way back here in, let's see, 2022, we do have a break of structure below this low back here. So in terms of the larger time frames, right, the higher time frames, we have that BOS and we also have the market coming off of the top of this channel. So we're going to talk about this with the DXY chart in a lot more detail. But to me, when you look at this rounded top, you look at the structure here on the higher time frames, you look at these imbalances back here like this through here and this one. In my opinion, we are most likely headed back here over the longer term. Okay. Again, this is not, I hate to forecast, but at the same time, when you've got this kind of chart set up, it is hard to ignore. Okay. It's very difficult to ignore. And it's even more obvious when we look at the DXY chart. Okay. So just to kind of wrap up here, guys, 4-hour time frame, this area down here is going to be basically 114.12, 114.43 or so. This region down here is going to be support, but I'm not getting bullish there. I'm looking for some relief to once again short. Okay. So looking at the DXY, I want to show you guys this one next because I am going to show the pound as well. Okay. GBPUSD, but the DXY, guys, is super interesting here. So we've talked about this before. I've mentioned this monthly time frame before. In fact, we've talked about this during this entire consolidation in this area. So this is a monthly chart, meaning that every candle is 1 month. Now, this goes back to 2011. Okay, so lows down here and highs up here. It is a great looking parallel channel, right? I mean, very, very clean. So this is also why I've said for months now, I've said this for a very long time, that as long as we are holding this on the higher time frames, it makes no sense to be bearish on the US dollar. Now, furthermore too, what you'll also notice is that off of these highs up here, we have once again another parallel channel. And what's really interesting about this, okay, so here comes the potential 2026 target over the next, let's say 6 months or, however long it takes, right? Looking at this here, you can see that a couple of things. First of all, we're coming off of this channel support. Now, I will be the first one to tell you too, looking at this here, you do have all of these lows back here, okay? And you have all of these highs back here. However, what you'll notice here is that on even the weekly time frame, the DXY is starting to show signs of a breakout. And furthermore too, like I've mentioned in all these recent videos, daily time frame, go back here. This right here, guys, is a bullish change of character. So following this close right here, we were looking for that higher low to develop. And from there, higher prices, okay, higher rates. So for the DXY, going back here to the monthly time frame. So this up here is the top of this descending channel from 2022. Okay, so that's the very first thing, is if you notice the price action here, ever since 2022 has been this, okay? So a pattern is a pattern until it isn't, right? And so as long as this descending channel is here, then the next logical spot this market could be headed is back up here toward this area. Now, what you're also going to notice is that off of this low right back here, this is a fair value gap. It's an unmitigated fair value gap. So right there at 106. And furthermore too, this is the monthly time frame. If we go to a weekly, you can see same exact thing, right? Right back here, this is an unmitigated fair value gap. And you can see the displacement back here on this weekly candle. And I mentioned this before in videos. I've actually mentioned specifically 106 many times, that if the US dollar could show signs of a bottom, that this could be where we are headed. Okay, so my longer term target, obviously this is open to change, right? If the market were to change, then I will change with it. But if we really start to get above these highs back here, right, and really start to break out from this, then my longer term target for the rest of the year really is going to be 106. Okay, and again, that could change. I hate the forecast. That's not typically what I do. But this chart is just so incredibly clean. And we also have this fair value gap right up here that intersects with the top of that channel that I had to share this with you guys. Okay, so for now, I see no reason to think that this right here won't happen again, considering this inefficiency back here in this area. And we also have another inefficiency here as well. There's a lot of inefficiencies here for the DXY to potentially go and clean up, okay? Now, looking on the lower time frames though, here's where we get a little bit more granular, right? So obviously we have the DXY moving within this 4-hour channel. So this up here is going to be some resistance. Now here's the thing though, you look at the daily time frame, it's bullish, right? You look at this chart even, it looks bullish, okay? In my opinion, you don't want to be getting bearish on the US dollar just because it is tapping into some resistance here. Because the thing is, you don't know if this right here is going to even hold, okay? we could just from this channel right here, we could just see the DXY maybe pull back, right? And then break out from this. And so you also look here at this larger, let's go to a daily time frame. Look at this larger channel. Okay, again, we have the bullish change of character back here. We have the higher low developing. We now have the market starting to take out these highs. Okay, so you look at this structure here from the lows down here, okay, and the highs. Well, if this stays intact following this bullish change of character back here, then guess what? We're probably over the longer term headed up here toward about 102, 103. Okay, so again, you don't want to be getting bearish, in my opinion, on the US dollar. Looking at this chart here on the 4-hour, you don't want to just blindly get bearish up here because we're coming into resistance, because when you look at this on those higher time frames, in my opinion, this has a runway toward that 102, 103 area if the DXY can get above these highs. Okay, so I am looking for US dollar longs on pullbacks. The same thing with the euro, right? If we come down here in this area and we get the balance, I'm looking for shorts on relief. Okay, simple as that. So with the pound, guys, we finally got on the 4-hour time frame, we finally got this BOS. This has been basically a month of sideways action. So you can see that this really started back here in mid-May, and it took until mid-June for us to finally get a new break of structure on the 4-hour. So this moves our protected high down here to this one here, just above 1.35. Okay, so for me, what I'm looking at, obviously we have this low, these lows back here. Okay, so just like with the euro, we could see a bounce from this area, in which case I'm looking for some relief to come back here into imbalances, and then potentially look for a lower time frame shift, that change of character to get short again to target lows like this. Okay. Now, in terms of the bigger picture, we have on the euro, we have the market actually giving us on the daily time frame, we have it given us this bearish change of character over here. Okay, so this was back in March. Now on the pound, we don't actually have that, because if we go to a daily, what you'll notice is that this up here was clearly the BOS, so very similar to the euro. However, what we don't have here is we don't have the market taking out this external low. So this down here, just above 1.3. So this comes in right around 1.3008 or so. This level down here is going to be the one to really shift things lower for the pound, okay, in the bigger picture. However, with that said though, again, we still have this BOS following FOMC on Wednesday. So I am looking for shorts on relief, which as always, guys, I will be sure to update Discord members. I do every single day. We talk about these. I share trade setups every single day. And I also share my trades in real time. So we do all of that in Discord, so there's no guessing. Okay, so for the pound, I'm looking at support down here at these lows, right around 1.316 or so, possibly some relief down here for this market if we get down here. And this is very similar to the euro as well. I mean, this probably comes in right about the same area. You look at the euro here, the proximity to this area down here, and the same thing for GBPUSD to 1.316. So looking for, again, possibly a bounce from here, down here in this region, for some relief to come up here and mitigate some imbalances. Now, whether we come up here toward this area here, okay, or this one up here, that is going to largely depend on what we see on the lower time frames. Okay, so as a hypothetical, if we were to see the pound, move down here over the coming days, sometime next week, and test this area and then give us signs of a local bottom. Now, I am not getting bullish down here. I am not buying this, guys. All I'm looking for is relief up here into imbalances like this here and possibly this up here. Now, what determines whether we see this, okay, and not this is going to depend on what we get on the lower time frames. So in other words, if we were to see the pound come down here into this region and do this here, okay, and give us lower highs and lower lows, and then give us a change of character, right? That's our sign that we are now looking for shorts on relief, okay, or at least that I am. Now from here, if we see this, right, into this inefficiency back here, if we then see this right here, then that's our indication that we probably do not see this, okay? So this right here would also then be a change of character. So all this comes down to, guys, is just structure. It's looking for those structural shifts on the lower time frames to tell you whether this up here, okay, is likely, or if this is all we get. Okay, so that's really it. It's very, very simple stuff, and it's the same thing every single time. Once you get good at this stuff, you'll realize that it doesn't matter about the time frame because markets are fractal, meaning that you can use that same pattern, that break of structure, change of character on every single time frame. It doesn't matter if it's the weekly time frame or the 1 minute time frame, it all works. But what matters is context, okay? Context of those higher time frames. That's what's going to be your true edge. Okay, so when you combine the higher time frames like this here on the 4-hour, and then looking for those 15-minute shifts in areas of value, that is what is going to change the game. Okay, so overall, guys, bearish on the pound, bearish on the euro, very bullish on the US dollar. However, with that said, I still want to see pullbacks, right? Even if the US dollar, the DXY here does clear these highs back in this area, I still want to see a pullback down here into value. And again, I don't know if that's going to be this here, this inefficiency here, or this one down here. It's just going to depend on what kind of price action we get if we do get down here, okay? What is the lower time frame telling me in terms of, do we just see this inefficiency mitigated, or do we see lower for the DXY before higher again? But overall, like I said, if you look here at the higher time frames, the monthly, really guys, longer term, I could be wrong on this, but longer term, I do think, areas like 106 could come under pressure later this year, as long as this stays constructive, okay? And as long as we can get above these highs over here on the higher timeframes. So I truly hope this video has helped. Be sure to check out that free SMC training that shows you exactly how I trade full time. That's going to work on Forex, commodities, crypto, indices. It doesn't matter. As long as there is enough liquidity in the market, then the strategy I teach will work. So be sure to check out the link right here on the screen, or the link in the description as well. So until next time, trade well. I will talk to you again in the SMC Outlook.